Good morning. This is Horizon's Middle East and Africa. These are our top stories this morning. Asian stocks shrug off U.S. gains and bond traders unwind bets on a rally in treasuries. That's ahead of a rare double whammy of CPI data and a Fed decision today. Hamas requests changes to a U.S.-backed ceasefire proposal in Gaza. The Secretary of State Antony Blinken says Israel has reiterated support for the plan. Plus, we talk IPOs and private credit in the Middle East with our guests this hour, including the Saudi Exchange CEO. Well, it's just gone 8 a.m. across the Emirates. I'm Jemana Versace in Dubai. There is so much going on today, but at first on investors' minds, of course, is going to be that CPI print coming out later, and also that double whammy with the Fed meeting coming up later this evening as well. All eyes will be on whether those numbers actually surprise to the upside or whether the inflationary numbers actually continue to point to a disinflationary trend. The impact on the Fed, we'll have to wait and see with those dot plot projections. We'll talk more about that on the show. But yesterday was also a big day for one stock, and what a difference 24 hours makes. So yesterday at the same time, we were talking about the muted reaction out of the investment community to Apple's AI event. Well, look, throughout the course of the day, what happened to Apple stock? We actually ended at an all-time high, up more than 7%. So very strong momentum actually got built into Apple stock, record high for that stock. And of course, that propelled other equity markets higher as well. S&P ended the session at an all-time high too, up 0.3%. It didn't just stop there. 10-year yields, 4.4. We had a very strong 10-year auction yesterday. I believe the strongest we've had in a couple of years. It tells you that demand actually is being tempted in at around 4.5% on the yield basis. And then 10-year yields in France also very much in focus. We are up 30 basis points in just the last 3 trading sessions. People are getting nervous about what's happening politically in France into those legislative elections and the possibility of a win for the right and far right. It's having an impact on European bank stocks as well. These are French bank stocks. Societe Generale down 12% throughout the course of this week. Crédit Agricole down 6.7%. BNP also down almost 9% as well. So a lot of repricing is going on in French assets. Let's also check in on how markets in Asia are faring. We've had some data out of China. Avril Hong is standing in Singapore with the latest. What are you watching out for this morning?
Yeah, Jumana, there's a lot of selling going on in the Asia Pacific as well for slightly different reasons. We are digesting the China data, but also investors are taking money off the table in anticipation of the US CPI and the Fed dots. So we're seeing a lot of red on the screen. The Hang Seng is leading declines about 1.5% down into the lunch break. The Kospi is a bit of an outlier. It's getting a boost from Apple suppliers, delayed reaction to the AI event, and that is also helping to cap declines on the Nikkei. It's the Apple suppliers that are gaining ground today. Flip the board on that China data front. What we saw was the consumer price gain above zero, but it was less than estimates. The factory gate number showed deflation narrowing, but as our colleagues at Bloomberg Economics have been flagging, this is due to base effects. The takeaway, base case, is still that demand in China is weak, yet that's unlikely to prompt PBOC easing just yet because of the pressure it might exert on the Chinese currency. We're seeing the onshore yuan holding flat. The focus really is squarely on what we're going to get out of the US, Jumana.
Yeah, well, 20 months of deflation out of China, that's something you need to bear in mind when you think about investing in the macro environment over in China. Avril, thank you so much for bringing us the latest. Well, traders are rapidly unwinding bets for a rally in U.S. Treasuries with the next release of inflation data coming just hours before the Fed's rate decision on Wednesday. For more, let's bring in Bloomberg currency and rate strategist Ven Ram. Well, it's a busy day for U.S. investors. We had you on earlier this week talking about dot plots, and you were saying currently there's 3 penciled in. If they revise it to 2, then it's sort of in line with market expectations. 1, of course, would be quite hawkish, and 0 would be outrageous, I think is the word that you used. Question is, what are investors actually expecting, do you think? That's probably more important.
The market expectations are aligned with 2 rate cuts because if you look at the pricing on treasuries, according to my model, it's exactly bang on target with 2 expectations for 2 rate cuts. If they get if they indicate only one rate cut, I think rates will sell off by 15 basis points. So yields will march higher by that much, both at the front and the long end of the spectrum. But it depends what kind of calibration the Fed wants to do here. Are they going to do a marginal calibration, or are they going to accept that, concede that, look, they got it wrong in December and March, and are they going to do a wholesale change? If they withdraw all accommodation, meaning no rate cuts at all, I think financial market conditions will tighten, will put pressure on stocks. I think on the whole, it'll be good for inflation. If they, on the other hand, say 2 rate cuts, that is kind of quite dovish, and that the markets, which is what the markets are priced for, and that will mean that financial conditions continue to be loose, making Fed's job even harder.
Well, it's not just, we talk about it, when I say the dot plots, I'm talking about the median, but then, of course, the distribution of the dots is going to be interesting as well. If there's more clusters calling for 0, then, that's obviously a lot more hawkish than what the market would be anticipating. So we want to look at that distribution as well.
Absolutely.
Yeah.
Absolutely.
So let me ask you, in addition to this, we also have CPI data too. To what extent do you think that could also be a big driver for markets today?
I think insofar as it's an outlier, it'll be a big driver. If it's not an outlier, and the point to keep in mind is that economists have been pretty all right in calling the month-to-month inflation prints, not the long-term inflation prints. The month-to-month inflation prints, the variance hasn't been a whole lot of late. That means that, the chances of us getting an outlier print are reduced, which means that the focus will fall back on the dot plot and on Powell's messaging at the press conference.
Van, let me just ask you quickly about the price action OATs. It's been pretty remarkable how much we sold off in the last couple of days, up more than 30 basis points. You just put out a piece, a note, suggesting that this price action could continue. You still see bearish price action in these bonds. Why is that the case?
Absolutely, because I think that the price action is just getting started. Because if you look at my model on French securities, it's got a 97% predictability as to what is going on. It explains 97% of the movements. That's extraordinary for a model. So that suggests that the fair value of 10-year treasuries, 10-year French securities, I beg your pardon, is 319. They are now trading at 322. So in other words, it's just getting started. So it's got a long way to go. If you look at the French...
So when you say 390, 3.90...
3.19.
Oh, 19.
It's now trading at 322.
Right.
So I think that it's got more to go. And the way you would measure it is look at the spreads against Germany. And there we are doing about 60 basis points. I think as a first stop, I indicated 64 basis points, which I think it touched yesterday. But I think there is potential for it to go all the way to 2017 wides, which was about 75 basis points.
Wow. Yeah. Okay. So another 10, 15 basis points of widening from here. All right. Something to bear in mind. Van, thank you so much for sharing your views and what your model is putting out vis-a-vis these French OATs. Clearly a big focus for some of the European investors out there. I was at currency and rate strategist Van Ram. Let's bring in Mehvish Ayub, a senior investment strategist at State Street Global Advisors. Good morning to you. Wonderful to have you with us. I'm sure you heard my conversation now with Van talking about the setup of all of the events to come later today. Let me just ask you, what is going to be the biggest driver, do you think, for markets? Is it going to be the CPI print or those Fed dot plot projections?
Good morning, Shimana, and thank you for having me on the show. Now, I think ultimately it really is all about the Fed. I think the CPI data definitely has the potential to sway their decision, but I think it's really about the dot plots and how that lines up with market expectations. I mean, I personally, been following this for a long time now, I'm a little bit tired of this focus on month-to-month prints. I think one has to really sort of step back and look at the overall trend. There is definitely still evidence of disinflation. It's just not at the rate that is sufficient enough to justify the Fed cutting rates anytime soon.
How do you think the market would react if the Fed revised down their dot plot projection from 3 to 2 for this year?
Yeah, I think the market is already pricing in anywhere between 1 and 2 rate cuts. I think the last time I looked, it was around between 35 and 40 basis points of rate cuts priced in. I think really it's about the forward guidance. What is the commentary going to be? And I think broadly, when we think about multi-asset portfolios, it's about expecting that the data the Fed is ultimately data dependent. We are data dependent, and having that flexibility and willingness to adjust positions and having a good construct of your portfolio that weathers the volatility, given all of the risk events that we have on the horizon. And we have two of them today. We have another very significant one on Friday with the Bank of Japan. So it's really just ensuring that the portfolio is resilient. You have adequate defensive plays in there.
Right, so let's talk about that. How do you ensure your portfolio is defensive? Because I also see that you have an overweight to equities. That doesn't sound very defensive to me unless you're picking the defensive sectors within equities.
Yeah, you're absolutely right, Jumana. So what we've seen, actually, we are guided by both fundamentals and sentiment indicators. And we have a broad sentiment indicator called the market regime indicator. And essentially, that's been pointing us towards having an overweight in equity since the beginning of this year, albeit a bit of a break in the month of April. Now, essentially, we do have quite a significant overweight to equities, but we also have an overweight to cash, and we also have an overweight to gold. So it's a little bit of a barbell strategy. Interestingly, what we've seen is actually a broadening out of that overweight and equity exposure across the US and European and emerging market equity. So before it was very focused on just the US, whereas now it's broadened out across different regions. But the corresponding underweight to all of that is really in broad fixed income. So that is actually our key call, is that underweight to fixed income, rates higher for longer, and ultimately that's how we're positioned.
Well, so let me just pick up on the fixed income argument. Obviously, what's happening in Europe right now is perhaps a little bit idiosyncratic to France with the repricing higher post those European elections. But yesterday we had a very strong 10-year U.S. Treasury auction. That tells me that investors are actually beginning to get lured in by a 4.5% yield on U.S. assets. Why is that not appealing to you?
No, you are right. And I think actually that is encouraging to see that the auction for once actually went well. So there is some demand for US Treasuries. I think US Treasuries in the broad fixed income spectrum also have quite defensive characteristics. And I think with the election risk, with the macro risk that we have out there, it makes sense in your fixed income universe to specify and potentially have an overweight. So what we have done in the past is have the underweight in sort of aggregate fixed income, but have selective overweights in long-dated US Treasuries, again, as a defensive hedge. That's not something that we've had recently, but certainly US Treasuries are looking more attractive at these levels. I think one has to think about time horizons. So if you're a very long-term investor, absolutely fixed income at these yield levels, particularly on the government side, is attractive, but in the shorter term, more sort of tactical view, ultimately we are looking at rates going higher.
Yeah, very clear. Mehvish, thank you so much for joining us today on the show. That was Mehvish Ayub, State Street Global Advisors, Senior Investment Strategist. And still ahead, we speak exclusively to Saudi Exchange CEO Mohammed Al-Rawaya about the influx of firms listings in the region. But up next, Hamas is seeking amendments to the U.S.-backed ceasefire deal in Gaza as Washington pushes to end the 8-month war. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Hamas says it has replied to mediators over the U.S.-backed ceasefire proposal, but a source says it is seeking some amendments to the deal. The U.S. says it's now evaluating that response as Washington pushes to keep negotiations alive and end the 8-month war with Israel. For more, let's bring in Dana Khrish, who leads our breaking news coverage for the Middle East and is the head of the bureau over here as well. Dana, obviously Secretary of State Antony Blinken has been doing his tour through the region, Egypt, Israel, and now it seems like we have got a formal response from Hamas vis-a-vis the Biden truce proposal. What do we know about what their response includes at this point?
So we saw Hamas yesterday in a joint presser with Islamic Jihad saying that they submitted their response and that it was positive. It ended there, basically. And we saw Qatar and Egypt saying, yes, we got this response and that we will will work until we get a deal done. In a separate presser, actually, we have a Hamas official saying that this response would pave the way for a deal. Now, it seems that they are adamant and they want this deal. And of course, the U.S. wants everybody to agree on the deal. And we saw Blinken yesterday saying that the Prime Minister Netanyahu reaffirmed that commitment to the deal. Now, the deal basically is three phases, right? The first phase is a temporary ceasefire, release of hostages, and ultimately the withdrawal of Israeli troops. Now, I think that's where the sticking point is. Israel wants to finish what it started, eliminating Hamas and making sure that no October 7 attack happens once again. Hamas wants guarantees that there will be a permanent ceasefire and the complete withdrawal of Israeli forces from Gaza.
And of course, Israel are pushing for the release of all hostages before they agree to phase 2 as well. So it seems like there's a lot of talk going on behind the scenes on how we go from phase 1 to phase 2. Let me just ask you, assuming it does actually pass and the U.S. is successful with this proposal, what does that mean for de-escalation around the other borders? And here, of course, I'm talking to what's been happening in Lebanon. You were on the show earlier this week talking about the increase, the intensification of daily exchange of crossfires between Israel and Hezbollah based in the south. Would that also mean a de-escalation there as well?
Now, what we understand is that there might not be a de-escalation from Israel's side, and that the message to Lebanon is that Lebanon's front is separate from Gaza. If there's a ceasefire there, it doesn't mean that it's going to reflect on Lebanon immediately, because as well, Israel wants to secure its borders, and one of that is pushing Hezbollah away from that border about 10 kilometers, and that is still a sticking point here with Hezbollah saying they would not negotiate on anything before a ceasefire in Gaza. So it's all very unclear here. And I think that with a ceasefire, we might have some hope of this extending to the other fronts. But for now, the message is that it won't.
And so just to wrap up the Secretary of State Blinken's tour, he's in Qatar today. What more can we expect out of the meetings that he's having?
So he's in Qatar today. He's going to meet with the Qatari Emir. And that's, of course, more of to show that this relationship is solid, despite all the criticism that has come out of Israel against Qatar and its role in the mediation. So this is important to show that this strategic partnership is still alive, and they're showing that they're talking to end the war.
Yeah, well, it's still the same mediators, Qatar, Egypt, speaking alongside U.S. officials and Hamas representatives. So a very long process. Dana, thank you for bringing us the latest. Dana Khresh, who leads the breaking news coverage for the Middle East and is our bureau chief over here as well. Now, Africa's biggest streaming company, MultiChoice, will be reporting earnings later today. The company blames a weak macroeconomic environment as well as a sharp depreciation of the Nigerian naira. Jennifer Zawazaja, our Africa correspondent, is here in Dubai, yay, and joins us in the studio. Just give us an update on what we should be watching out for in these earnings later today.
Joanna, I mean, for the past few weeks, months, we've been talking about Vivendi and Canal Plus and really this takeover offer of MultiChoice. And so the expectation is really that this takeover is likely going to overshadow a lot of the results that we get later today. But when we talk about the earnings, there's a lot of other macro issues, as you just mentioned, that are potentially going to weigh on any sort of earnings that we get from MultiChoice. Notably, you mentioned the naira, which is particularly interesting, too, because we have also a strong rand that potentially contributed to it. We also earlier this year saw Showmax, which many people say it's the competitor to Netflix on the continent, getting a revamp. So a lot of these things potentially impacting the earnings for MultiChoice. But, they potentially did get a boost, though, from other big global events. And so the question is, though, really, what is the takeover offer and how is that going to impact future growth for the company?
And it seems the signals from MultiChoice is that they're open to a full takeover for Canal Plus. I think they already have an ownership of about 45% or something. And so they're open to a full takeover. How is that likely to affect future plans and some of the, the language around the outlook that comes out today?
Right. We're expecting to hear a lot about it, especially because the period just opened up in terms of how many more shares that they can buy earlier this month. And so the question is, how is that going to impact the rest of the year? Because the period where they can take over more shares lasts until next April. And so we'll see really how this impacts it. But you can expect that the CEO will get a lot of questions about it. And in particular, the regulatory issues around what happens with this deal, what the South African regulators are asking for, and potentially then what does it mean if we do see a spinoff of this, and what it means on the continent, because we have really seen Vivendi and Canal Plus trying to make inroads onto the continent, onto the streaming offerings that are on the continent. And so we'll see really if they're able to do that and what sort of costs are going to have to go into being successful at that.
Yeah, very clear. Thank you for joining me around the set today. That was Bloomberg's Africa correspondent, Jennifer Sabazaja. Well, still ahead, our exclusive interview with Saudi Exchange CEO Mohammed Al-Rumeih. This is Bloomberg.
Ships coming to the Middle East and going to China are founded concerns. Any country that has adversaries would think that way. The UAE has proven to be a strategic partner with the US. I think you've seen alignment on government-to-government level throughout, let's say, the last couple of months and as well the last 50 years.
Well, that was the UAE State Minister for AI and Digital Economy speaking to me yesterday on the show. And Hamad Al-Alama's comments come just ahead of new Bloomberg reporting on the U.S. weighing further curbs on China's access to cutting-edge AI chip technology. Now, sources tell us that the new measures would target so-called GAA, or Gate-All-Around Architecture, which promises to make semiconductors more powerful. We're told U.S. officials are in the early stages of talks on how to protect the technology, with new rules under consideration aimed to make it harder for China to assemble the systems needed to build and operate AI models. Intel and AMD both finished yesterday's session lower on the reporting. The companies are among those looking to start mass producing the chips with the GAA design later this year. And coming later on Bloomberg TV, British PC maker Raspberry Pi soars almost 40% in its London trading debut. The company's CEO, Evan Upton, joins Daybreak Europe next hour. A quick look at European markets before we get into that open. Here's a look at, broader markets. You can see that the S&P futures are leaning sideways, but of course we did end the session yesterday at another all-time high. NASDAQ as well up 0.1%. All eyes on Apple. We had a very strong day yesterday with the stock up more than 7%. So even though the initial reaction to the AI event was negative, we did see a very, very strong reaction throughout the course of the trading day yesterday, with it ending up 7%, giving a bit of boost to NASDAQ. As you were speaking about early on the show, there's going to be a lot of focus today on those CPI numbers. Will they surprise to the upside? The Fed as well, their dot plot projections is going to be on investors' minds. Will they trim down their expectations for how many rate cuts are coming this year? And then this is a look at fixed income. U.S. Treasuries sitting at 4.4 10-year yields. And we saw a very strong auction yesterday, the strongest auction we've seen in about a year. So tells you that demand has begun to come back in to U.S. fixed income markets. But a lot more on this show. We'll be right back in a moment, and we will be speaking to the Saudi Exchange CEO. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks shrug off U.S. gains, and bond traders unwind bets on a rally in treasuries. That's ahead of a rare double whammy of CPI data and a Fed decision later today. Hamas requests changes to a U.S.-backed ceasefire proposal in Gaza. The Secretary of State Antony Blinken says Israel has reiterated support for the plan. Plus, we talk IPOs and private credit in the Middle East with our guests this hour, including the Saudi Exchange CEO. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. An all-time record high for the S&P, propelled higher by NASDAQ. One stock in focus was Apple yesterday. Throughout the course of the day, we did actually gain a lot of momentum. The stock ending up 7%, more than 7% higher by the end of the day. An all-time high for Apple. So again, shaking off some of those initial concerns that the investment community had on the back of that AI event that Apple held. Initially, the reaction was quite muted. But of course, we did actually end the day up at a record high. So S&P also leaning positive today in terms of futures. 10-year yields also in focus. We had a very strong auction yesterday in the U.S. Investors seem to be drawn back in at around this yield level. So 4.4% is where we're at. The strongest auction we've seen since 2022. So again, tells you that investors really are focused on this outright yield level here. This ahead of two key events today. We've got CPI in the U.S. to watch out for, in addition to that Fed meeting later this evening. So two huge signposts to watch out for. We're also keeping a close eye on some of the developments in European bond markets. French 10-year yields up more than 30 basis points in the last couple of trading sessions. We were just speaking to MLife strategist Venram earlier, who was saying he expects perhaps another 10-15 basis points to go before it hits fair value on our own internal model. So something to watch out for as investors become increasingly bearish into this parliamentary elections that are taking place. Quick look also at some of the key French stocks, because we have seen major pullbacks there too. Société Générale down 12% over the last week. Crédit Agricole down more than 6%. And then BNP Paribas also down about 8% throughout the course of the last week as well. So it's not just fixed income getting hit, but domestic focus equities as well. Let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, a lot of data to digest from China today.
Absolutely, and data from Japan as well. I'll get to that in a bit, but that lackluster CPI print seems to be adding to those concerns about weak demand in China. So the Hang Seng is leading declines today, but I wanted to highlight some of the stocks that are among the biggest losers today. The chip-related ones, such as SMIC. I mean, we're hearing about how the US could further limit China's access to AI chips. Automakers also in focus. Look at the way Geely is faring, and we are still waiting out for that decision from the EU on EVs, potentially those tariffs coming through. So this is what we're seeing. That's the drag on markets today. But let's flip the board and take a look at data, because it is producer prices that were out of Japan today that showed a pickup that was faster than expected, its fastest clip in 9 months, and seems to suggest that the import material cost surge is feeding in a way into the inflationary pressures in the country, adding to the case for the BOJ to tighten things, also to support the Japanese yen. But if you look at the way dollar yen is faring today, it's still high. 157.2 is really all eyes on what we're going to get out of the US, Jumana.
Yeah, US and Bank of Japan on Friday. So two major central banks to watch out for. Avril, thank you so much for the overview. Now, switching over to private credit, Blue Owl Capital co-founder and co-CEO Marc Lipschultz says that it's still a great time for private credit, even amid fears on company debt defaults and the Fed's higher for longer rate strategy.
This is a really great time in private credit. You know, I know there have been some efforts by, I might call our antagonists, to paint the picture, you know, picking little anecdotes here and there, but the reality is that we have not seen an uptick in defaults. We have not seen an uptick in companies having trouble, you know, performing, and I think that's by virtue of making really good credit selections and low loan-to-value investments.
But others might say that, unlike the public market, you don't have a Fitch or a Moody's saying that this is a default on the debt the way that they would for something that's traded on the public markets.
Well, a default would be a default in any market. You're right. We don't have the opinion of the credit lending agencies on the business. I would proffer that's one of the great advantages of our model for the user of capital. Listen, at the end of the day, as opposed to a third party, and no offense to Fitch or Moody's, they do a wonderful, wonderful job for what they're designed to do. But we're designed to provide long-term capital and make a very in-depth decision around those companies, counting on the long-term strategy to get paid back, and it works. We've done about $100 billion in loans. And our running loss rate has been 7 basis points. And so there's something quite substantial about the ability, like a long-term investor in equity, to take a long-term view of the credit, not what happened this week or this quarter, but are we going to get paid back? And the terrific news about our business is we consistently get paid back.
And Marc, though, but you do know, I mean, there is a timing for investors, that is. There is a timing issue that some of them do have to be mindful of, particularly when they need the cash for other things here. And there's been a lot of concern here that, at least coming off of those last vintages, some folks aren't getting the payouts in the time frame that maybe they had anticipated here. What do you say to those people? What do you do to actually placate them?
It's a great question, and Romain, good to see you again since our time in Milken together. It is, I think, a really great point. It says pick your manager wisely, understand their strategy, understand what you're investing for and in what structure. We've designed our firm from day one in credit to be able to serve institutions, CalPERS, CalSTRS, and individuals as true peers. They have different uses for liquidity, different needs. And so you have to be very aware, I think, of what you're investing in and what product, what structure.
Well, that was Blue Owl Capital Co-CEO Marc Lipschultz discussing the resilience of private credit despite fears on company debt defaults. So let's bring in another voice, Theodore Koenig, Chairman and CEO at Monroe Capital, which has recently announced their expansion into the Middle East. Before we get into your plans for the Middle East, I just want to start off by asking you, do you share that optimism about the outlook for private credit for the rest of this year?
Yeah, I do. Private credit has been the fastest growing alternative asset class for the last 10 years. And the reason why is it's proven resilient in terms of low interest rates, high inflation, low inflation, COVID. It's a real place where investors, both institutional and high net worth, can hide out and generate good, solid, consistent, stable returns.
Yeah. I mean, one of my colleagues was at Super Returns last week, and she spoke to the co-president of Apollo, and he said, I'm here to tell you that everything is not going to be okay because many within the private equity space, it's not private credit, but private equity space, have not yet done write-downs or markdowns on their portfolios to reflect this higher interest rate environment. And therefore, there's a whole world of pain that is still yet to come to the private equity market. What sort of ramification is that going to have on private credit?
Yeah, remember that private credit lends at about a 50% loan-to-value rate against companies. So, for example, if we're at 4 to 5 turns of leverage on companies that are selling at 9, 10, 11 times price earnings, we've got a lot of cushion built in. Private equity firms are hanging on to the last turn of leverage to generate returns and to get their money back. Private credit is at top of the capital structure in these buyouts with roughly a 50% loan to value. So we've got a lot of cushion from a safety standpoint in generating returns for our investors.
How do you see the competition coming through from banks? Banks are increasingly getting involved in direct lending space, undercutting on margins. Does that create some headwinds for opportunities for you?
You're exactly right. At that higher end of the market, the syndicated loan market, where the upper middle market competes with banks, we're seeing margin compression. We're seeing higher leverage. We're seeing more loose loan documents in favor of the borrowers. However, in the middle market, in the lower middle market where we play, the syndicated loan market's not a competitor. So we're insulated from a lot of what happens with the bank regulatory market.
Talk to me about your expansion plans in the Middle East. We're obviously a Dubai-based show. So what are you looking to achieve in this region? Is it that you're looking to invest or to receive investment from the Middle East?
We focus on the U.S. markets. It's the largest and deepest market for private credit. We opened an office recently in the Middle East in Abu Dhabi, and the plan is to service our clients better. Middle East is probably the fastest growing market today with Asia for private credit investing because the investors in the Middle East have a very long-term investment horizon. Generally, they're younger economies. They can take a little more risk. They can generate illiquid asset investments. and it's become a really wonderful asset for a lot of the Middle Eastern investors. So we want to be closer to our investors. We want to create long-term partnerships with our investors. And the only way to do that is to be there with our investors in the same market.
I guess it kind of ties into what you were saying, and the fact that if you have LPs who have a longer time horizon, then it helps with the case because there are fewer redemptions going on, there are fewer exits going on in the space, so it takes some pressure off if your LPs are also willing to sit it out.
Not only that, but more and more of the LPs in the Middle East are very sophisticated, well-educated, very well-deeped in alternative investments. We've generated double-digit net returns for our investors for the last 15 years. U.S. investors have long been in this space, European investors, Asian investors, and the Middle Eastern investors, sovereign wealth funds, pension funds, insurance companies, are just finding the private credit space attractive today, and allocations are going up significantly.
Finally, just a question for you on sort of the macro environment in the U.S. We have this Fed meeting coming up later. We've talked about higher rates for longer, but are you beginning to see some ramifications on borrowers? Do you get a sense that borrowers are struggling here and that we could start to see an uptick in defaults and delinquencies?
I think it's possible. Right now, remember, we've had interest rates much higher. If you look at historical rates, there's an average of about base rates of 5 to 7%, around 6%. We've just been spoiled. We went through a 10-year period where interest rates were very low. It caused a lot of activity. M&A was as hot as it's ever been in 2019. 2020 was a COVID year, but 2021, it came back with a vengeance. Interest rates started to go up, so 22 and 23 were more tame years from M&A. We're starting to see an increase in 24, and I think 25 is going to be a very big year for M&A. Remember, these private equity firms raised a ton of capital, and they need to start returning that capital to their limited partners. They've held off the last 2 years while interest rates were high, but I don't think they can hold off much more. There's going to have to be a return of LP capital in the private equity community, and that starts with sales and LBOs, and that's going to be good for private credit.
Yeah, that's a great place to leave it. Thank you for giving us your outlook on both private credit and also private equity, and also for staying up so late for us. It's almost midnight in Chicago. Theodore Koenig, Chairman and CEO at Monroe Capital. Thank you. Also coming up on our show, Saudi Arabia and Brazil are pushing further to deepen trade and investment. We look at what the two global South players are looking to achieve. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Saudi Arabia and Brazil have long been economic partners, but the two countries are now looking to forge even stronger trade and investment ties. This week in Rio de Janeiro, an institute backed by the kingdom's nearly $1 trillion public investment fund will host its first Latin American-focused investment conference. And last year, Brazil's exports to Saudi Arabia hit a 10-year high. So Bloomberg's chief Saudi correspondent, Matthew Martin, joins me here in the studio. Well, let me just start off by asking you, what are Saudis looking to achieve with enhancing their ties with Brazil? Is this about actual economic ties, or is it about soft power and diplomacy?
Well, I think, look, there's clearly an element of both. If you look at if you look at trade between Saudi and Brazil, it's actually quite small. FDI is pretty negligible, so there's not an immediate economic benefit for Saudi, unlike some of the other countries that they've been reaching out to build relationships where they want to get FDI in out of places like the UK and out of the US and out of China. With Brazil, this is much more about some of this soft power play. The Saudis want to position themselves as being one of the leaders of the global south. And so cozying up to Brazil, just like they have done with China. They obviously have very good relations with Russia through OPEC+. They've been developing relationships with India as well. So bringing together all of those big BRICS nations and putting themselves at the center of it is a big part of Saudi Arabia's goal of trying to position itself as being a global leader and sort of an alternative to Western leadership.
Yeah, what about vice versa? What are Brazil looking to get out of Saudi Arabia? And again, all within the framework of multiple discussions you and I have had about Saudi Arabia having to focus more on internal investments as opposed to handing out checks left, right, and center around the world, right?
Yeah, exactly. Brazil is one of those cases where there's a good synergy between a lot of what Saudi Arabia is trying to do, a lot of MBS's goals with Vision 2030. Big things in there is food security, investing in the agriculture sector in Brazil to be able to bring those exports into Saudi Arabia to help with the food security issues, and also minerals. The kingdom is trying desperately to develop this minerals hub, and it's from the minerals that it doesn't have domestically, it's trying to go abroad and buy. And so Brazil, we've already seen them do one deal already last year with Vale and this Manara Minerals investment. I think it's very likely that we're going to see more of those sorts of things start to happen as those kind of ties develop, and we see Saudi try and leverage Brazil's agriculture and minerals deposits and resources.
Yeah, I mean, so there is, there are elements for a symbiotic relationship here. You mentioned closer ties with Brazil, closer ties with Russia. I mean, if you add all the acronyms together, you're basically spelling out BRICS, aren't you?
Yes.
But Saudi haven't formally joined the BRICS alliance.
Yeah, I think this is going to be at the FII event that they're hosting in Brazil. This is going to be sort of one of the undertones of the conversations there is that, there was such effort has gone into getting the Saudis on board with BRICS. And they've turned up to some of the meetings. They've been invited, but they flirted with this idea a long time, but they've just not consummated as yet.
Yeah.
And they've kept the rest of the BRICS group waiting. They say that they're still evaluating. It's very unclear as to why it's taking so long. And I think this goes back into that sort of balancing act that the Saudis are wanting to play. They want to be a global South leader, but they don't also want to go too far away from their traditional relationships with the West, which is where the big money flows have been, where the big security and defense pacts are. So they have to try and balance those two things off against each other, and that can be a tense balancing act at times. And I think you see that reflected in this unwillingness to commit to BRICS as quickly as other nations that were invited at the beginning of this year have done.
Yeah. Matthew, thank you so much. Fascinating. That was Bloomberg's chief Saudi correspondent, Matthew Martin. Well, plenty more ahead on Horizons Middle East and Africa. We will be back in a short moment to give you a review of what's been happening with some of these key markets as we head into the European session. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, Citadel's global head of rate trading, Michael DePass, spoke exclusively to Bloomberg TV and says he expects, and this is a quote, overreaction to the Fed's dot plot.
The inflation data in particular, there's a feeling that the volatility around those prints going forward is maybe going to come down. I think for tomorrow, the focus really will be on the FOMC. And in particular, what does the dot plot show for the number of expected cuts for the rest of this year? That number has obviously come down materially over the course of this year. And the market's split between, I think, somewhere between 1 and 2 cuts. So there'll be a little bit of a reaction, whatever the outcome.
How big a pinch of salt would you take when it comes to the 25 dots? The Fed's, all of our predicting capabilities have been severely tested this year.
I think you take a very big pinch of salt with anything relating to 2025 predictions. The data has confounded many people. The cycle has not evolved the way we would have thought. Yeah. It's a very different cycle than what we're used to. And I think the market recognizes that if we're talking about the 25 dot, for example, it's so data dependent. There's so much evolution that can happen to that prediction over time that it's weighted certainly less, I think, than it would have been in the past.
In terms of, so how are you thinking about the kind of the way that the arithmetic works? If we get 2 this year, do I assume that I'm getting a cycle? Or is this just a mid-cycle kind of adjustment? Do I assume that I'm going into a full-blown kind of cutting cycle here, and there are going to be more that follow? Essentially, this is the debate that we're having at the ECB right now. And I'm just, what is your kind of current thinking about how many we get in total? Is it a cycle? Yeah. What makes a cycle?
Yeah. Well, the ECB were made sure to stress that it wasn't the beginning of an easing cycle. They clearly want to retain optionality, and I think that's going to be the major theme out of central banks, is that we will adjust, we will respond to the data, but we want to maintain optionality. We don't want the market to get ahead of us. We don't want the market to maybe ease financial conditions in a way that's not really beneficial. So I suspect that we're never say never, but it's going to be difficult to get back to the zero lower bound. I don't think that's where we end up this cycle. I think we're talking about a cycle that ultimately looks like 200 basis points worth of easing, and probably a bit more spread out than what we've been used to over the last 10 or 15 years.
Well, that was Citadel Securities will have rates trading. Michael DePass speaking exclusively to Bloomberg's Guy Johnson. Well, there is so much to watch out for today in markets. Just a quick recap of some of the price action we've had over the last 24 hours. Yesterday, we spent a good chunk of this show analyzing that Apple AI announcement. And initially, the reception was quite muted from the investment community. But throughout the course of the day, what we did see is a turnaround. So Apple at a new record high, up 7.3% in trading yesterday, propelling the S&P to another all-time high. We closed about 0.3% higher, looking to open up in positive territory. Big day in the U.S. today. We've got the Fed, we've got CPI to watch out for. But we're also keeping a close eye on European political premium. This is how French banks have performed over the course of this week. Some of the major banks down more than 5-6%. But stay tuned with Bloomberg, because coming up on Daybreak Europe, the Greek Prime Minister Kyriakos Mitsotakis speaks to Tom.